Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. This is Tuesday, the 6th of December. I'm Daniel Lam, your host for the podcast. I mentioned in yesterday's podcast about winning the chess tournament on Saturday. And on Sunday, it was back to parents' duty, where I took my baby out to the Standard Chartered annual Arts in the Park event in Hong Kong. There was a short on-stage drama on Charles Dickens' A Christmas Carol. They show Scrooge, the protagonist, counting his money and the IOU receipts from people that have borrowed money from him. Now, one of the key drivers that bondholders would be very interested in would be how is the default risk likely to evolve, given the likelihood of looming U.S. recession. It is also important to our investment recommendation because we've been advising investors to be rotating some of the U.S. equities exposure into income assets. With the Fed policy arguably already at restrictive levels, we believe the recession risk has surged amid tight financial conditions. We observe the corporate bond market is also starting to price recession risk, as illustrated by some portions of the global bond yield curve turning negative, i.e. inverting, with investors likely to be starting to add more longer maturity bonds to lock in long-term yields. Against this recessionary outlook, corporate credit quality is likely to deteriorate as corporate earnings growth slows and interest burden piles up, resulting in a widening of corporate bond yield premium, i.e. the spread over government bonds. But we expect this impact to vary across different types of corporate bonds. For DMIG corporate bonds, we expect the impact to be contained for two reasons. First of all, credit rating upgrades of IG bonds continue to outpace downgrades, which, in our view, reflects their relatively strong balance sheets and resilient business profile to weather a recession. In addition, most of the issuers have pre-funded and strengthened their capitalization in previous years of low interest rate environment. So despite the further risk of a recession, we continue to believe that DMIG corporate bonds is a focus area for investors to gain exposure to income assets. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.